Eric Mwathe, with another mentorship video. This time we're going to be using the RSI to help us gauge the sentiment in the market in terms of what the market environment is generally like. Sometimes you want to be at least have a sense whether your markets are generally grinding higher or if markets are generally grinding lower. And sometimes this distinction can be a little bit of a problem, but I'll show you one method that is visually helpful in helping us determine how market sentiment is poised. Now, if you take the 50 level on the daily or weekly on the monthly chart, pretty much, and sometimes even on the hourly. So if you take a look at how your markets are trading in relation to the 50 level of the RSI, you'll notice that when markets are trending higher, there tends to be the observance that more than often the market is going to find any excuse in the book to bounce back above 50 with uniform activity, and this bounce can take many forms. So the market tends to use the 50 level to bounce. It could be a bounce on the weekly, on the daily, or on the monthly. But this is key. It's the uniform action below 50 and back above it that tells you that you are still in an uptrend. Now, this is something that you can easily observe on the charts. It doesn't take a lot of time. And once you observe it, it tends to tell you that, yes, markets were just pulling back and that they are poised to go higher. Now, on the other hand, you'll notice from time to time when markets are now on a downtrend, the market uses every excuse in the book to start bouncing off the 50. And you'll see that it is using uniform activity. Again, the key here is the symmetry, and it has to be uniform for you to interpret this as some signal that you can take advantage of. So you're looking for symmetry, looking for uniform behavior. So on the way down, the market will tend to have any one of these types of uniform action. The key is above 50 and back below it with uniform action. So you can see, as long as it is uniform action, and once you observe that market is now showing resistance with uniform action around the 50 level, then that tends to confirm that you are in a market that more than likely wants to go down over time. So let's take a look at some examples, and we're going to use some of the current market charts for some explanation. Take a look here at the Nasdaq 2-year weekly. You can see here nice uniform activity below 50, back above it. Looks like a nice U-type formation. The market eventually moved off the lows here, and now the question is, since we are struggling to hold above 50 here with uniform activity, is the market changing its behavior? Now let's take a look, just for the sake of an example here, of a long-term weekly view for the Dow or for the Nasdaq, and this is going back to 2006, and we're in 2015, of course. Take a look at the multiple examples of uniform activity. You got uniform activity below 50, back above it, nice lows there in 2010. You got an instant of uniform activity below 50, back above it for these short-term lows. You got nice uniform activity here, which was during this period. You can also see that eventually it has a slight uniform activity there, which is the lows of late 2011. You got uniform activity here, uniform activity there for the lows there, nice uniform activity here for the lows there. So that is a market that is bouncing and trading well, as you can see over time. All those uniform activities kept the market in an uptrend on the 50 level on the weekly. So we can draw a simple line around that 50 level. Every time we bounce on the 50 with uniform activity, market is good. And now we are waiting to see whether the market can recapture back above that 50 level with uniform activity. Now, I want to go to the daily, because on the current daily chart, you can see some type of evidence that the market is now a little bit in a different phase. For example, take a look at this uniform activity here when the market was in a nice, steady, grinding upward type formation. Uniform activity here, another instant of uniform activity here, and another instant of uniform activity here, all of them giving us short-term lows. Uniform activity here bouncing on the 50. This is like a double bottom back above 50. All this double bottom again below 50 and back above it. Again we bounce double bottom here on the 50. All this kept the market stable. But now I've been talking about that it looks like we are now entering a phase where you see this resistance here. There was a rejection there below 50. We kissed 50 here and we had rejection. This is at this point, so this is a very critical level here. Once we saw this show uniform activity, it touched 50, was unable to move above that. This was a sell signal and actually led to a big drop in the market. And now we are looking at the market seemingly over the last week or so forming what looks like a nice small inverted U-type formation above 50, back below it. And today we are getting a relatively big down day as the market looks to potentially move below 50. If it moves below 50, that's also going to suggest that it is going to confirm a big down day. So what we are looking at here and what I'm getting at is, it seems to me that now we've gone into a different phase of this market. While we were trending high over the last couple of years, it seems like now the 50 is being used for resistance by the market, at least for now. And as long as that's the case, it suggests that over time this market more than likely, just using the RSI by itself, there's a slight shift in the behavior of the market, and now it wants to more than likely over time be moving lower. Let's take a look at the current daily chart for the Dow, and what we're going to do is, number one, just draw a simple line connecting the highs. I've been talking about this the last week or so. The market hit that level and seemed to be pulling back, so that resistance has been confirmed. But this video is about behavior of the market around the 50 level. So of course we know that the 50 is right there, right? That's a 50 line. And take a look since the highs here at how many times the Dow has been struggling to hold above 50. There's double top resistance at the 50 level and back below it there, which gave us these highs. There's a dome type uniform action above 50 and back below it, which gave us these highs here and a move lower. And now we are looking at another instant where the market tried to move above 50. There was uniform activity rejection, and more than likely this is also showing another added evidence that this market over time, in my opinion, is poised to go lower until this behavior of resistance around the 50 can change. Now if we switch and go to the monthly chart for the Dow, just take a look at how over the last nice bull market here since 09 to 2015, so this nice great moving bull market, throughout this phase, take a look at how the monthly chart has offered support with double bottom support here for these lows. It kissed that level with uniform activity below 50, back above it. That uniform action gave us the lows here. And as of right now, we're talking about September 18, 2015, the market can either weave itself back above 50. Now if it can move back above 50 with uniform activity, that's going to be a good sign that the market actually could just be pulling back before it continues to new highs. So there's a fight going on between many time frames, for example the daily and the monthly that we are seeing here. So we still have to be open. If the Dow can move back above the 50 level on the monthly with uniform activity in the next month or so, then that's going to be a buy signal. Otherwise, and this is important, if we can't stay above 50 for the first time since 2010, if we can't stay above 50, then that's going to suggest that this is a market that is actually poised to go lower. And so visually, this is where the fight is taking place. It's taking place on whether the market can hold above 50 or not. And it's an important distinction. If it holds with uniform activity above 50, that's a good market. If it fails, then that's a market you want to avoid. Now, I would be remiss if I don't mention on the monthly right now, and I've been talking about this to no end, the fact that we are trading at 3-year lows here might be a problem on the monthly RSI, and the fact that the MACDs are both on the Dow already trading at 3-year lows, which is the most or the best or the strongest sell signal that I can think of, in my opinion. This move by the monthly MACDs and the RSIs to 3-year lows, in my opinion, in a way sets the stage for the potential that this might not be uniform activity support. Okay, and the way we know that is if it turns positive for the month. Right now it's down about 24 points for the month, so it has to be positive to influence the monthly RSI to be back above 50. So I have been saying for a while, as long as the Dow is negative for the month, there is no point to try and buy the market, because being negative for the month suggests that it is not strong enough to weave itself back above 50. Hope that makes sense. The more it stays negative, the more it's making 3-year lows on the RSI and on the monthly MACDs. So a Dow that is down for the month is not a good situation to buy. If it turns positive for the month, and especially if the RSI moves back above 50, if the RSI on the monthly can move above 50, that might be indication that the market is actually trading well. As an example, there is some evidence, and all this is playing out. Right now, if you take a look at the Dow transports are up about 3%, and they are bouncing on the 50 level on the RSI. This is uniform activity, is very good action. If the market can sustain this, it could actually be the first market showing support. If we go back to a long-term monthly for the transports, what you see here is that on the monthly, going back to 09 off the lows here, we've had many instances. Just like the Dow, we had a nice double bottom support here at the 50 level, nice entry on the monthly. We had uniform activity below 50 and back above it during this month here for nice lows. We touched 50 precisely for nice lows here. Market went on a fantastic run on the Dow transports. So right now it is showing support. This is good support. If it can continue holding above 50, and if the Dow can also do the same, then the market has resolved some of the issues, and actually the market should be bought. So what I'm getting at here is the fight that we see in the market is taking place on this level here. Some of these things can take months to resolve or weeks, so you have to be patient, wait for them to play out. If you take a look at the current daily chart for the Dow transports, and this is interesting, you'll see a couple of interesting things. Just like the Dow, draw a line connecting the daily like that, and you can see that it hit this level over the last 2-3 days and is pulling back. Okay, take note of the uniform activity action. Now the Dow transports have been down for a while, as you can see, down over the last 7-8 months or so, and yet you can see that this has been self-evident. Take a look at uniform activity here, uniform activity above 50, back below it, which gave us these highs. Uniform activity above the 50 level and back below it, which gave us those highs. You can also see uniform activity above 50, back below it, which gave us these highs. Uniform activity above 50, back below it, gave us those highs. And we can even see that this was uniform activity above 50, back below it. And even this here, in my opinion, is like a uniform activity, because what the market did is, if you take that as the 50 level, now we're talking about this here, it did something like this. And that to me is uniform activity here. Oops. Uniform activity in that instant, which is this level here. So even that was a short-term top. So what is going on right now is the market, if it moves back below 50 again with uniform activity, and you can already see the shape of that. Looks like it is forming another U-type formation above 50 back below it. Then the movement below 50 could suggest that this could become a problem for the market. Hope that makes sense. Okay, now while I'm here, I want to talk about something briefly. When you take a look at my primary trend line, and you can find the videos on my YouTube channel, again, trading primary trend lines. And the key here is, in the current market, there's a possibility that, for example, because this is a 52-week low right there, any trend line break is going to be a primary trend line break, might suggest a deeper move lower, because this trend line is connecting itself to a 52-week low. And more on that, again, I go into details on this video series here called Trading Primary Trend Lines on YouTube. So check that out for you to understand what I'm talking about. So which also means that on the MACDs, especially on the smaller MACD time frame that we use, any trend line break, like right now, that seems to be a trend line break, is a primary trend line. Again, why? Because it is connecting to a 52-week low. So that, to me, could also suggest that if this ends up being a situation where the Dow transports weave themselves above 50 and back below with uniform activity, that would also be another sell signal. And keep in mind, a break here would be a primary trend line break, because it is connecting to a 52-week low. So I digress, but check out those primary trend line videos for an explanation going into depth about this concept. Take a look at the S&P 500 daily, and we can draw a line which is a backtest line like that. Now I've had this line on my charts for a while, and you can see that it gives us the break, nice break there, which is this break, and a serious drop after that. And now we've come and hit that line with uniform activity and failed. I do sidetrack here for a little bit, but this is a backtest line. That's why I always say keep your lines as long as you can on your charts, because sometimes they give you an inner look into what's going on in the market. Now we're talking about uniform action. S&P 500, the last couple of highs. Take a look at this high, corresponds with uniform activity above 50 back below it. We see also all these are uniform activities above 50 back below it for that high. Slight uniform activity above 50 back below it for this reversal there. And then again, uniform activity above 50 back below it for this high. Same thing is going on right now, as we see that it is showing rejection at the 50 level, which might explain why the market is pulling back. So that, to me, is an indication of a market that is actually looking to go down. Now, if we use the principle of the primary trend line, any trend line break here is a serious violation, which might suggest a bigger drop in the market is about to take place, a bigger drop more than this one. And also, if, and it's an if because it's still playing out, if we break this trend line here, right now it's showing some signs of support, but if this is broken as a trend line, that trend line, because the Dow transport made 52-week lows, a break of that trend line could suggest a bigger drop. Again, check out those primary trend line videos for more info on this. Now, all this plays out in many time frames. For example, currently take a look at the Dow hourly and just go back to the recent lows on the market right here. Might not be the best, so let's not use that. But this is uniform action below 50 back above it, and we are using RSI of 26, which gave us the short-term lows. Eventually here we hold around the 50 level for these lows here. And right now the market has a chance, if it wants to, on the hourly to recapture the 50 level in the market. If it does move back above that 50 level with uniform activity, then this have been confirmed as lows. So if this becomes resistance around the 50, if it now becomes resistance, then I would suggest that there's a bigger drop here. Now, because on the hourly for the Dow, this is a 52-week low, this low here, when the Dow dropped down 1089 points, this Monday here, I believe was August 24th, if we break this trend line connecting the lows, or we can even say right now it's broken, but a trend line break would be a primary trend line break, which would suggest a bigger drop. But because we're talking about support at the 50, the main thing here on this video is whether it can move back above 50 or not. Now keep in mind we are looking at just one aspect, which is how markets behave around their 50 level. Let's take a look at the 30-minute for the Dow, so we can crystallize that this also happens on smaller time frames. If you're a day trader, for example, you can also use this principle. Take a look at this uniform activity below 50, back above it, which was off the lows there. We have multiple double bottom here, or double bottom instant for these lows, and we'll see whether the market can hold above 50 with uniform activity or not for another buy signal. Now that's one view. The other view is the one that I like, which is the uniformity of the lows here. The market has made higher highs, as we can see. So this entry here was successful. Anybody who was lucky enough to get long on that buy signal there was lucky, because once we moved above that level, the uniformity principle has helped the market. If you're a day trader or you trade short-term signal, you can see that the uniformity principle came in play during this drop here. And again, this is a Dow 30-minute chart, and also that held. We held here for these lows. We came close here for these lows, and right now the market is holding. So if you are a short-term trader, this is where you take the chance that the market could be bouncing and going long, because it has found support on the uniformity line. So lots of things here to consider, but for this video I want to stick to the support on the 50 or not. Let's take a look, for example, go to another market so we can actually see how this plays out in other markets. Take a look at the FTSE. That's the weekly. Take a look at the daily. And the daily for the FTSE, you can see the last couple of highs. In number one, take a look at this dome type formation on the daily. Uniform activity above 50, back below it on the daily, which gave us the highs there. Uniform activity above 50, back below it, gave us those highs. And now we seem to be forming a resistance at the 50. So given that information, one has to assume that this is a market that logically, based on resistance at the 50, logically over time wants to go lower. That's one market in Europe. Let's take a look at another market, which is the Canadian market by way of the TSX. And what we see here also is nice instant of how markets behave. After we broke this support trend line here, which is around the 50, this market has come off the highs. And every time it shows uniform activity resistance at the 50, it makes a short-term high and pulls back. Uniform activity around the 50 and rejection there for short-term highs. Uniform activity rejection at the 50, short-term highs. Uniform activity and rejection at the 50, short-term highs. Double bottom uniform activity rejection at the 50 level on the daily, short-term highs. And over the last day or two, uniform activity rejection at the 50 level. That again is a sign that this market, given that visual rejection at the 50, is a market that is one that might be more likely looking and poised to go lower over time. Let's take a look at another market. We're taking a look at gold by way of the ETF, the GLD, and just want to show you the uniform activity areas. Number one, you can even see that this could actually be looked upon as being some type of uniform activity above 50, back below it, short-term highs, and the market did pull back. Take a look at this obvious uniform activity above 50, back below it, which gave us those highs there. Uniform activity rejection, it went above 50, back below it with uniform activity, which gave us that high. So the key is the areas where you can see obvious uniform activity. So that's one view, but one of the better signals is based on the uniformity principle. For example, there was a break, let's call it somewhere there, break in the GLD or gold. That break brought us off the highs here, and we can draw a uniformity line off that break on the RSI. simple line that we've been watching over the last couple of months, and every time we have uniform activity rejection at that line, the market does actually pull back. Uniform activity moving above the red line and back below it with uniform activity give us those highs. Uniform activity, it touched the red line and back below it, give us the highs there. And again, you can see uniform activity above the red line, back below it for those highs. And right now, the GLD is back to that level. So clearly you can see that if it shows another instant of rejection at that line, that is where it pulls back. And keep in mind this red line, talking about this red line here. That red line, surprisingly or not, happens to be around 61.8. So the more we understand some of these critical numbers, the more we can see that certain market behavior takes place around those levels. So anyway, digressing a little bit, this video at the 50 level or not. I want to go back and take a look at some historical daily charts for the Dow. Let's go back here to 2002. So this is the year 2002, and just want to show you some of the uniform activity areas on the 50. Take a look at this uniform activity in 2001. Uniform activity above 50, back below it. The Dow had resistance there and pull back. We have uniform activity bounce above 50, back below it for these highs here. And all this were uniform activity rejection at the 50 level. Uniform activity rejection at the 50 level. Uniform activity rejection at the 50 level. And then we had 9/11 during this plunge. But before the plunge, you can see that the market had instances of uniform activity rejection at the 50 level. So we can say that the market already had a bearish tone. What is interesting is that on the recovery leg, while the market started recovering, so we can say this period here when the market was trending higher, you can see a change in behavior because now the market was using the 50 level for uniform support. Uniform support at the 50 for these lows, uniform support below 50 back above it for those lows, and then uniform activity bounce for those lows there. So we can see that even when you take a look at a historical daily chart for the Dow as an example, the support at the 50 or rejection at the 50 makes a lot of sense in determining the general direction. While we were getting resistance during these instances here, this rejection at the 50, the market was leaning towards a down market. And then once we start seeing this support at the 50 level, now that support corresponded with a market that wanted to go high. So we started getting support with uniform activity at the 50 here. Generally speaking, the market had a nice upward trend. So let's go back and take a look at another historical time frame. Now we're taking a look at the Dow, and I'll call it between 1998 and 2000. And just so that we don't spend too much time, take a look at some of the lows or the highs. You can take a look at this low here for that nice pullback low, uniform activity there. We can take a look at another which is, take a look at this here, uniform activity above 50, back below it, give us those lows there. And we see that there was a rejection there at 50, which is somewhere here before this drop there. We can also see that the market was rejected just about when it tried to move above 50 here in about August of 1998. So this rejection took place here, and of course we know the market had that sharp drop in 98. And so we can see that on the way up during this period when the market started recovering, so let's go through this quickly. On this nice recovery leg coming off the lows of 98, you can see that the market was using the 50 level for support. It held support here around the 50 for those lows. It touched 50 with uniform activity for these lows. And also you can see here uniform activity bounce above 50, below it and back below it, uniform activity bounce for these lows. And so that's when the market was trading well. Let's take a look at another time frame. We go back and take a look at the Dow. This is now in 1987. And in 87, take a look at when the Dow was in an uptrend coming into the August of 1997. 1987. So we've gone back quite a while. And we can see here that on the way up to new highs, the market was bouncing with uniform activity, below 50, back above it for those lows, below 50 and back above it for these lows. It touched 50 here and back above it for those lows, and it went on to record new highs. Now take a look at what happened. Number one, a couple of things. We had a break here, this trend line break. If you extend it, it gives you this high. Now I have to stop here and emphasize how this is powerful. Oh my God. Okay, because you see here that this extension of this break, so we broke down there. If we extend the same line, it gives us this high. And anybody who sold here was able to get out of the market before the massive plunge of 1987. I mean, you had a chance of getting out of this market before this crash, because the market showed backtest failure. So the things that we're talking about here are so powerful. So that was one view, that the market had a backtest failure on that line. Again, the line was this line here. Keep in mind that this rejection here, surprisingly or not, took place around 61.8. Where do we see this number? Exactly. So that was one view. There's another view, which is what we are learning here, is the market had uniform activity rejection at 50 and back below it, which was this high. And also we can look at this as some type of uniform activity above 50, back below it for those highs there before the drop. So that was significant. So we have to be aware that this uniform activity can be used on multiple time frames and also on multiple markets. And as long as you are seeing the market observe uniform activity, again, so let's go back to what we began the video here, is the key here is what the market is doing in terms of its support or failure at the 50 level. So 50 line, we know that if the market can hold above the 50, that's good. And the key is the uniform activity. On the way up, it's going to show a myriad of support levels, many types of support levels. That's a good market that is trending higher. When the market is poised to go lower, you get the uniform type of resistance around the 50. It could be anything even like this, but as long as it's uniform action with the rejection at the 50 level, that's a bearish market. Eric Muathe, muathe.com. Watch how the markets are responding when they come with contact with the 50 level on the multiple time frames of the weekly, dailies, and monthlies for some indication of whether you should be leaning long or leaning short. Eric Muathe, muathe.com. As always, good luck, peace, and blessings. Mwah, I am.